Today I want to talk about a topic that affects you and I negatively. How the rich avoid paying taxes while leaving the rest of us to fund America. That's right. While you're paying upwards of 20 to 30% of your income in taxes, the rich are paying effective tax rates in the low single digits, and it's all completely legal. This isn't about politics. It's about understanding a system that works differently for those with extreme wealth and how they abuse it. Let's break down the 6 main strategies billionaires use to minimize their tax bills. Strategy number 1, borrow, don't sell. Most billionaires don't actually have billions in cash. Their wealth is tied up in stocks, real estate, and other assets. And here's the key. You don't pay taxes when your assets increase in value, only when you sell them. So instead of selling assets and triggering capital gains taxes, the wealthy simply borrow against them. They get cash without paying any taxes. Let's say a billionaire owns $10 billion in company stock. They need $100 million for a new yacht. Instead of selling stock and paying roughly $20 million in capital gains taxes, they take out a loan using their stock as collateral. The interest rate? Probably around 1 to 2%. Way less than the tax would have been, and in some cases, they can even deduct that interest. They also do this with real estate, owning multiple multi-million-dollar properties which go unused, all with the same goal: owning assets with appreciating values while they are driving housing prices up by reducing the supply, especially in highly desirable areas, where they can then take out loans against these properties. It's a strategy famously summarized as buy, borrow, die. Buy assets, borrow against them throughout your life, and when you die, your heirs get those assets with a tax advantage that we'll discuss later. Strategy number 2, tax-free wealth growth. While your savings account interest gets taxed as ordinary income, billionaires structure their investments to minimize taxes in several ways. First, they hold assets long term. If you sell an investment after holding it for more than a year, you pay long-term capital gains rate, which maxes out at 20%, instead of the top income tax rate of 37%. And circling back to real estate, they also love it because of something called depreciation, where even though a property is actually increasing in value, tax law allows owners to claim it's losing value over time, creating paper losses they can use to offset other income. And while you might use a Roth IRA for retirement, some billionaires have found loopholes to stuff tens or even hundreds of millions into these tax-free accounts, something that they were never designed for. Strategy number 3, offshore tax havens. This one's a classic. Billionaires and corporations set up complex networks of companies in places like the Cayman Islands, Bermuda, or Luxembourg, countries with minimal or zero corporate taxes. They then shift profits and intellectual property to these entities, so income appears to be earned in these low tax jurisdictions instead of here in the United States. Imagine a US company develops a valuable patent. Instead of keeping it in the US, they transfer ownership to their subsidiary in a tax haven. Then the US-based company pays huge licensing fees to use that patent, reducing their taxable profits here while accumulating untaxed wealth offshore. The IRS has tried to crack down on this, but billionaires hire armies of tax lawyers to stay one step ahead. Strategy number 4, philanthropy as a tax shelter. This one I'm a little conflicted about, as philanthropy does tremendous good in the world, but it also offers significant tax advantages that the wealthy use strategically. When billionaires donate to charity, they get a tax deduction for the full market value of what they give, even if they paid much less for it originally. So, say a billionaire bought stock for $10 million, that's now worth $100 million. By donating the stock directly to charity, they avoid paying capital gains tax on the $90 million gain and get a $100 million tax deduction. Double benefit. But it gets better. Many billionaires don't donate directly to operating charities. Instead, they use donor-advised funds, which let them take an immediate tax deduction while distributing the money to actual charities later, sometimes much later or never. Private foundations must distribute only 5% of their assets annually, meaning 95% can continue growing tax-free while the billionaire maintains control. Strategy number 5, the step up in basis loophole. This might be the biggest tax break of all, and it happens after death. When you inherit assets, their cost basis is stepped up to the current market value. Let's say a billionaire bought company shares for $1 billion that are worth $50 billion when they die. If they had sold while alive, they would owe taxes on that $49 billion gain. However, their heirs receive those shares with a new cost basis of $50 billion. If they sell immediately, they pay zero capital gains tax. This is how generational wealth transfers happen with minimal to no taxation. Combined with estate tax exemptions and trusts, billionaires can pass down most of their fortune tax-free. Strategy number 6, lobbying for favorable tax policies. The wealthy don't just use existing tax loopholes, they actively create new ones through lobbying. In 2017, when major tax legislation passed, private jet tax breaks and special pass-through business deductions didn't appear by accident. Studies show that for every dollar spent on tax lobbying, companies save hundreds in taxes. Take the carried interest loophole. It allows hedge fund and private equity managers to classify their income as capital gains instead of ordinary income, potentially saving them millions in taxes. So what's the result of all of this? The effective tax rate paid by billionaires has fallen dramatically over the decades. According to some studies, the 400 richest Americans now pay a lower effective tax rate than the middle class. This shifts the tax burden to everyone else, reduces funding for public services, and contributes to the growing wealth inequality. And as a side note, it was actually hilarious that while I was doing research for this, all of the articles that I've provided proof from seem to basically be bragging openly about how to abuse these systems. A sharp contrast to the normal tone I get when reviewing articles for my videos, which makes me feel like there is no fear of any of this actually changing. So what needs to happen? In my opinion, there needs to be a minimum tax on billionaires' unrealized gains. We need to close the step up in basis loophole. We need to reform charitable giving rules. There needs to be a global minimum on corporate tax rates. And we need to remove the depreciation deductions from real estate assets. Understanding how this system works means recognizing that our tax code wasn't designed for today's extreme concentration of wealth, and perhaps it's time for an update. What do you think? Should billionaires pay more in taxes? Or is this just smart financial planning? Let me know in the comments below. If you found this video helpful, please hit that like button and subscribe for more content breaking down complex financial topics. Thanks for watching, and I'll see you in the next one.